the semester 1 is going to finish by tomorrow, and semester 2 will begin on the 4th of May. That is next Tuesday. Yes, next Tuesday. And that will be on treasury bills and treasury bond government securities by Mr. Mangala Karunaratne. But unfortunately, the first semester examination, which was scheduled to be held on the 2nd of May, Sunday, has to be postponed. We will let you know the fresh date. That is because no one is allowed to enter the Institute of Bankers premises because the premises have been quarantined. So you have got more time to go through the material and be prepared for the exam. So let's begin today's presentation. The money market presentation. Yesterday we came up to this slide. We discussed and compared the money market of Australia with Sri Lanka, money market of India with Sri Lanka. That is with a view to give you more information where we should be heading and what areas to be developed. So the money market is essentially short-term securities. Maturity is up to 1 year or 12 months. Beyond that, longer than 1 year, long-term securities are termed as fixed income securities, fixed interest securities, generally described as bonds. What is the money market? Money market is the call or notice or term money market facilitating lending, borrowing of funds between banks and entities like primary dealers. An institution which has surplus funds may lend them on an uncollateralized basis to an institution which is short of funds. Excess banks looking for banks borrowing or with deficits, right? When we say uncollateralized, it is just free money given. What is your experience? How does lending banks choose to whom to lend? Is there collateral? Is there a prior identification? Yes, there is a prior. Yes.
Limits are established based on the credit risk, right, between the institutions.
Yeah. Yes, you are right, 90% right, but it's not only the credit risk. There is a composite factors that are looked at. The limit are fixed going by the capital base, then risk weightage going by the management skills and the volume of business as well. And the news coming out of each bank is materially analyzed by the correspondent banking department of each bank, and then they choose what amount of limit to be arranged. In this process, as I indicated, the capital funds available to each bank, the business volumes with each bank, and the management skills, particular individuals also matter. Their acceptance, the people at the top, board of directors and the CEO and the corporate management, and also their tendency to comply with the rules and regulations of the central bank and the market ethics. If there is slight news that one bank or its senior staff or the members of the board are resorting to little bit unethical practice or entangled with some unaccepted practices, then quickly the limits will be reviewed and adjusted. We have seen such incidents a couple of times. I think I discussed with you that with the Golden Key episode, Ceylon Bank and related banks and other companies, the limits allocated by other banks to Ceylon Bank and these other companies were revised very quickly, very quickly. And then they were restored only after the central bank intervened and the management was handed over to the Bank of Ceylon. Finally, in the lapse of a few months, the management was changed, the board was changed, and when Ceylon Bank and its associates restarted business on the in normal terms, only the so-called limits were replenished or reallocated. So therefore, excess funds, yes, they had to be invested, but the investment has to happen with proper consideration to whom the money is lent, even for a short period like one day. So therefore, it is a enlightened job or enlightened function. The transactions has to be reviewed by the middle office of each treasury of banks. And in this process, I also recognize the contribution by the brokers, money brokers. Whatever the news material for such decisions has to be shared with relevant parties to enable them to make those correct decisions. There was another incident, I think you all may be in schools at that time. The year President Premadasa was bombed or assassinated, his funeral was arranged for a Friday. President's funeral was arranged for a Friday. So on Thursday, central bank announced Friday will be a public holiday. And thereafter, those days, I was at the Bank of Ceylon as the chief dealer. Central bank requested all the banks to sort out amicably the lending and borrowing and the maturities for the Friday that are coming up. So the Bank of Ceylon, being the largest bank, had to receive a couple of 100 billion rupees from other banks for the money that were lent on the previous era maturing on Friday, and also the forward sales, foreign exchange dollar sales, rupee proceeds has to be received on the Friday. And totaling up the rupee funds receivable to Bank of Ceylon was a couple of hundred of billions. Not millions, it is billions. You can imagine the volumes at that time in the banks, interbank all-on market and the interbank forex market. So all the banks, through the Forex Association, they amicably settled, because being Friday, some banks were unable to send their messages or send their checks. There was no RTGS at that time. Send their checks to central bank in favor of Bank of Ceylon account for repayment of borrowed money or the proceeds of their purchases of foreign currency from Bank of Ceylon. One bank, I don't want to mention the name, one bank chose to stick to the rules. They said all the deals maturing on Friday, if it was declared holiday, should be delivered on the next working day, which is Monday. So Friday to Monday, involving how many days? 3 days, 3 working days. And those days, rupee interest rate was 20%, 20 or 22%. Dollar interest rate was about 6%. So shall we 20% and 6%? Interest rate difference is 14%. And most of the banks, through friendly discussions through the Forex Association, being members of Forex Association, I was the treasurer of the Forex Association at that time, that year. Had to pay the Bank of Ceylon on Monday after 3 days, but they paid, some paid with interest, some paid with value adjustment. I think you may understand what this value adjustment is. Simply, they pay 3 times the money that is, if Bank A has to pay 100 million to Bank of Ceylon on Friday, they pay 300 million on Monday, and then Bank of Ceylon paid back 200 million on Tuesday. You got it? That's value adjustment. And some banks resorted to pay interest for the additional 3 days, because there's so much big interest rate differential, 14%. But one foreign bank said no, Friday was declared holiday by the government. Central bank requested the deal to be settled on Monday. That's it. Nothing doing. And that particular bank had hundreds of millions of rupees to pay Bank of Ceylon on Friday. And the 14% interest rate differential, when worked out, amounted to about nearly about $500,000 rupees. $500,000 rupees of interest differential alone. So my negotiation with the head of treasury of that particular bank was futile, because they were arguing pell-mell that this is the practice immaterial of loss and gain. But I was arguing that foreign exchange business, that particular bank only, had a lot of foreign exchange purchases from BOC, and then they had to pay rupees. Foreign exchange business is based on fundamental that nobody should gain undue advantage over the other. When it comes to a deal between parties, it should be settled amicably. Not even red cent, not even half a cent should be benefited unjust enrichment by one party over the other. So therefore, this went on. Finally, the following week also approached, and then a couple of days we met at the Forex Association, and they could not come to conclusion because this guy was adamant that we should stick to the fundamentals. Then Forex Association wrote to the head of his ACI, giving the facts, not highlighting the high interest rate differential. So then the following week, I tendered my resignation to Forex Association committee as treasurer and indicated I don't want to be a part of this jungle association where they have no concern for the profit or loss of the other party as a result of the action. So then what I did was I enlightened the high management and pulled out all the limits to that particular bank. No money lending, no forex dealing, nothing. So a couple of friendly banks also joined me, joined Bank of Ceylon, saying that very unrealistic, uncivilized way of handling things by that particular foreign bank, and they also chose to not to deal with them. So a couple of weeks passed, and the CEO foreigner of that particular organization came to see the general manager of GOC, and then I was also summoned to a meeting. I explained the matters. So the foreigner was ashamed. And then he vowed to resolve everything. A couple of days went, and this head of treasury guy was walking into the bank by BOC with a check for $500,000 or plus some interest rate differential, and apologized. So we offered him a cake and a cup of tea, and we said we also said sorry for not being considerate, but however, it is not our money, it is bank's money, depositors' money that we are handling and belong to shareholder with the government. I related this story because there are events that unethical behavior of certain dealers, certain banks, which may warrant freezing of limits, pulling out of limits, because not only to put them on correct understanding, but also to safeguard the particular institution's interest. So that's how important the limits are when they are considered to be allocated to each bank. So the borrowing and lending for one day is also known as call money. Why money market is necessary? Functions of the money market. It provides the basis for operating and executing an effective monetary system. Now, with yesterday's discussion, do you agree with this? We said the money market particularly is the starting point of the yield curve or the interest rate curve, running to 1 week, 1 month, 3 months, 6 months, 1 year, and so on and so forth. So whatever that is happening in the money market, the shortest end of the curve has an impact on the rest of the curve. So it provides the basis for operating and executing an effective monetary system. So you see how important this is, where you all as money brokers support the call money and then money market instruments. It should be with the best practices of the market, and no one party should be affected or unduly profited at the expense of the other party, and also provides an orderly flow of short-term funds, to ensure supply of the necessary means of expanding and contracting the credit. That again we discussed yesterday. Expanding or the credit or lending of each bank will be influenced by the rate originated at the money market, maybe call money market, maybe treasury bill market. All those originate at the money market. And then also when the government wants to extend credit to a certain sector, these days specifically because of the COVID pandemic, they want to extend additional credit or whatever the money resources required by the small and medium businesses to carry on their business and pay their workforce. So they use the money market by reducing the SRR, lowering the interest rates, and creating additional few 100 billion rupee liquidity in this short end of the market. So central bank ensures supply of necessary means of expanding and contracting credit through the money market. Role of money market in economic development. A monetary economy is one which goods are sold for money and money is used to buy goods. Money promotes productivity and economic growth. This raises the demand for money to finance the increased transactions brought about by the expanded level of economic activity. I need to enlighten you on certain economic theory. Centuries ago, when money was not used, how did the people who produce goods and those people who bought goods for consumption exchange value? You have heard of a barter system, isn't it? The guy who produces paddy needs to wear clothes, and he has to locate a person who produces textile or garments and give him paddy and buy his garments. And what is the level of economic activity at that time? The paddy producer had the gigantic task of finding a person who produces the goods that he wants, the garments. And also sometimes if he wants medicine, he has to locate a Vedamahatya or doctor or somebody or a hospital. And he has to give paddy and buy those medical treatment. So the level of economic activity would have been very simple, isn't it? and the economy would have been very primitive. With the invention of money or something acceptable to all the parties, like gold or sometimes cattle, whatever they produce, exchange for gold or cattle or whatever. And that with that commonly accepted good for exchange of value, the economic activity increased to some extent. Then, few centuries ago in UK, the goldsmiths started to issue IOUs, a note that Mr. A had paid in paddy or whatever the value stored item, and that the goldsmith accepts his indebtedness to the Mr. A, that certain value has to be given to Mr. A. So that is the start or beginning of the invention of money. And thereby this exchange of this note between parties was the starting point for money circulation. When these no IOUs were in pretty much use, high activity, then the goldsmiths thought that they can pay not only the value of the goods deposited, but an interest also, because the IOU can be given to another party for his economic activity. So this was exchange of paper money. So at that time, the economic activity increased manifold. So like that, money, commonly accepted money, has increased the economic activity of this world many a time. And therefore, the monetary authorities emerged, central banks emerged, and they choose to control this money or paper money to regulate, to implement their monetary policy, as well. So that is what is explained in these three sentences in this slide. We will talk of many other aspects in the future slides. But it is very easy to understand when you read through, when you understand, when you study this subject like a story written a few centuries ago. What is the main problem of the money market? It is shortage of funds. When there is scarcity of funds, that's the main problem. Money market faces shortage of funds due to inadequate savings. I think we discussed about Sri Lanka's level of savings, about 18%. Whereas other developed countries' savings is in the region of 35%, 40%, 45%, and so on and so forth. Next factor is low per capita income. What is per capita income? Per capita income is the total income of the country, of the economy, divided by the number of people or number of population. Per capita income. Per capita income in Sri Lanka, I think you all are very much aware, but compared to other countries, they are in a very typical sad situation. It is around $4,000 per capita income in Sri Lanka, whereas other developed countries are in excess of $40, $50, $60, $70,000 per capita income. Then the poor banking habits among the people. People do not know much of banking. Poor banking habits. They don't resort to borrowing from the money banks. And this also contributes to the shortage of funds in the money market. Then indulgence in wasteful consumption. I think Sri Lanka is a typical example for that, isn't it? Wasteful consumption. Starting from our guys when they go for a buffet to serve their plate of foods, people might fill the plate with enough and more food and then come and sit on the table and will not consume the entire thing. But 3/4 of the food on the plate is left over, thrown away. Wasteful consumption. Then when it comes to the, I think a very beautiful example these days particularly is the import of motor vehicles. It is said that several thousand millions of dollars were spent by Sri Lanka to import of new vehicles, particularly to the politicians, parliamentarians, ministers, and the president and prime minister. But now the present president has stopped all that. But still, vehicle importers agitate for permission to import more vehicles without analyzing, as if they are living in another country, without consideration for the problems faced by the country or shortage of foreign exchange. Inadequate banking facilities in the rural areas, etc. Inadequate banking facility in the rural areas. Financial inclusion. Although there are bank branches, many bank branches, a lot of big banks operate in rural areas. Most of the rural population would not have a bank account, wouldn't want to open a savings account, and wouldn't want to borrow money. But they choose to live without banking facilities for their meager economic activity. So if these are the researched reasons for shortage of funds in a developing economy, when compared to the developed economies, use of banking system and the money markets have also been responsible for the paucity of funds in the money market. One or many of these researched points have been responsible for the scarcity of money in the money market. So the people who are leading a country, the political authority has many things, particularly the economists, central bankers will have to think far and then adapt their policies to increase these economic habits, activities in the country to make Sri Lanka a better economy. Okay, now we step into some of the identified learning aspects. Primary and secondary market. processes, role of the money market, participants in the money market and their role, money market securities, pricing of discount securities, and role of the central bank in the money market. Money market processes, primary market processes. Primary market is the issue of new securities. In Sri Lanka, we do not have much to witness other than the treasury bills and bonds in the money market. There are new issues and reissues at times. We can only compare with the Colombo Stock Exchange, which is the equity market, not really the money market, is the equity market. IPOs, initial public offerings. So had there been many of other money market instruments, like what we discussed yesterday, bank accepted bills in Australia and credit card receivables in some other country, had they been securitized, we could have had more primary market issues in those securities. But unfortunately, we do not have. We have only treasury bills and bonds. So we shall compare with the share issues or IPOs in the Colombo Stock Exchange time and again. Contractual arrangements for issuing securities. Now, in the stock exchange, to issue a initial public offering, what is the contractual arrangement they go through? The prospectus, and first of all, the approval from the Colombo Stock Exchange and the SEC. And this year, particularly, there are a couple of large IPOs coming up, isn't it? Winforce was one. And they are scheduled about 2 or 3 large IPOs in the Colombo Stock Exchange. But however, in the money market, treasury bills and treasury bonds are auctioned, and the central bank public department advertises the security ISIN number and the relevant details in advance, so that primary dealers and banks who are eligible participants and the employment EPF, Employed Provident Fund, and other funds who are authorized to participate in the auction. And going by that, the primary dealers and the banks advertise with their clientele so much treasury bills and bonds are with these features and at these rates, probable rates, will be auctioned and given the dates. And finally, the primary treasury bills and bonds come to the market through the respective auctions. So these auctions are once a week, isn't it? Is it that the bill auction now on Wednesday and the bond auction on Thursday and settlement on Friday? That's a process, right? So the contractual arrangement here is limited to the public department advertisement. Central bank being the backer to the government, and the monetary authority, their contractual arrangement doesn't specify. It's not a big document, but when it comes to a private company to issue shares, new shares through an IPO at the Colombo Stock Exchange, they had to compile a huge document, the prospectus and other attached documents. So it's a big process there. But here, the government representative, the central bank, being the monetary authority, they don't produce that kind of big document. But in the case of securitized credit card receivables or bank accepted bills or any other or invoices, there was an endeavor sometime back, some years back, to securitize the staff loan portfolios of Bank of Ceylon and People's Bank, the government banks. Government banks grant loans, particularly housing loans, to the staff members, isn't it? And the staff members keep on paying the housing loans to the bank every month with their salary. So the bank pays the salary and the repayment is guaranteed, more or less guaranteed, isn't it? So there was some arrangement to securitize the housing loan portfolio, staff housing loan portfolio. But the necessary legal arrangements and other things couldn't materialize because money market was not that thoughtful, not that provocating at that time. Methods of sale. Methods of sale in Sri Lanka, treasury bill, treasury bonds are through an auction. Wednesday treasury bills, Thursday treasury bonds. And for both, there are unique IS and IN numbers. And those who have submitted successful bids has to pay the publicity department on Friday. But there can be other methods of sale as well, particularly private placements, individuals. Now, the Colombo Stock Exchange, IPOs, how do they, what is the method of sale? It's an IPO. All the bids are collected and the price is predetermined, isn't it? Pre-arranged price. But in the auction, treasury bill, treasury bond auctions, price is determined at the auction. So that's the difference. So therefore, there are various methods of sale for the securitized papers in the money market. Rating agencies provide risk assessment. The Fitch rating, the S&P, or other rating agencies provide for risk assessment. And a few banks also had issued debentures, isn't it? Debentures, although they are issued through the stock exchange. And in those debenture issues, particularly mostly private placements. And the settlement clearing mechanisms for the treasury bill, treasury bond auctions is through the respective primary dealers or the banks who arranged for the bids to be submitted to the auction. And settlement, money settlement particularly is through the primary dealers or the banks' central bank account. Central bank debits those particular primary dealers or the central commercial bank account and credits the publicity department or the consolidated fund of the government through the auctioned bills and bonds, the value of auction bills and bonds. The IPOs through the Colombo Stock Exchange. What is the settlement and clearing mechanism? Each application for the shares at the predetermined price, the check has to be drawn in favor of the issuer through the stockbrokers, and that particular issuer collects the money to the share issue account, clearing those checks through the Lanka Clear. And when it is through a private placement, there is unique arrangement where the funds are credited to the share issue account or the central bank consolidated fund account when it is case of treasury bills or bonds. So that's how the settlement and clearing mechanism happens in the primary market process. Then in the secondary market process, trading arrangements for securities already issued is the secondary market process. Now we were comparing the stock exchange IPOs and shares issues. There is huge difference between the equity traded at the Colombo Stock Exchange and the money market instruments called debt instruments traded at the money market. What is this main cardinal difference? Equity markets or company shares, do they have a maturity date? Does the company who issues shares promise to repay the money collected on a certain date? No. The money invested in that particular company through shares or IPOs, the maturity is infinite because the life of that particular company, the business entity, the company is infinite. They are not supposed to close down. But when it comes to debt instruments like treasury bills, treasury bonds, debt instruments, and other debt instruments like debentures in the money market, there is a maturity date. The borrower has to repay the money borrowed on that particular date. Treasury bills, maturity dates are 3 months or 90 days, 180 days, 182 days, and 364 days, 1 year. And treasury bonds, 2 year, 5 years, 8 years, 10 year, or 20-year bonds has to be repaid on that maturity date. They are not infinite. So therefore, the Colombo Stock Exchange is providing the secondary market of the shares issued through IPO, the Colombo Stock Exchange. Any buyer of the shares issued through an IPO has, if he or she want to exit the investment, only avenue is the secondary market. In the secondary market, through his or her stockbroker, the share investment can be exited by way of sale. In the case of treasury bills, treasury bonds, yes, there is a maturity date on which the borrower, the government, will repay the investor. At the same time, the investor, the person who bought the treasury bill, treasury bond, can exit in the secondary market as well by trading, by selling the treasury bill or treasury bond that they bought. So trading arrangement for securities already issued is the secondary market. Particularly that for treasury bills and bonds, the primary dealer network created by the central bank, public debt department in the years 1998 and 99 and the year 2000, that period. Before that, every bank used to buy the treasury bill bonds through the auction and market it through their clients, to their clients. And there was no RTJ system, there was no SSS system. There was only paper certificates of treasury bills and treasury bonds, where we had to sign several bundles of treasury bills and bonds on maturity date, endorse it and carry them to the public debt department, submit them, and enable them to credit the bank account. Usually we expected the money to be credited on Friday, but eventually public debt took more time, and by Monday or Tuesday next, only money would be credited to the account because of the cumbersome physical certificate handling or processing. But now the secondary market is also facilitated very much because of the computer system, the so-called CDS, Central Deposit System for the treasury bill, treasury bond, SSS system, and the generic name that is known as Lanka Secure system. So therefore, now exactly on Friday, the money will be credited to the account of the primary dealer or the commercial bank, so that they can pass on the credit to the particular investor who submitted that particular security for them to claim proceeds. So settlement arrangements for securities traded in the secondary market. In the stock exchange, shares traded, the stockbroker credits the shareholders' account maintained with them, and the investor could withdraw or request the broker to pay to his or her bank account after obtain the sale proceeds. And stockbroker gets the money from the Colombo Stock Exchange. So that is the settlement arrangement for securities traded in secondary market. But if we are successful in arranging some other securitized documents like bank accepted invoices or credit card receivables, the settlement process, settlement arrangement has to be constructed, really arranged for the investors when they sell the securities, for them to obtain the proceeds of their selling of securities. Important functions of secondary market. Provision of liquidity. In the money market, one of the main function is provision of liquidity, so that no institution fails or lack of or inadequate liquidity, and no institution suffers a loss for uninvested funds. So provision of liquidity is, whether it's a treasury bill or treasury bond or any other money market security, there should be one market maker standing to sell and buy all the time. That is liquidity. Then the price discovery. Price discovery happens, as we discussed some time ago, with the supply of the security and the demand for the security, volumes playing a big role. When the demand increases, price increases. When the demand decreases and supply increases, price decreases. So without any other influence, when the price is fixed at a certain price, equilibrium price, we say that the correct price was discovered at that point. And this could change every moment, every minute, every day. Every now and then this equilibrium price will change with the change of volume demanded, volume supplied. So these two are key functions or requirement, key features of a money market or secondary market to find the correct price, whether it is a money market security or foreign exchange or value of foreign currency. Price discovery function is the paramount service that the money market provides for the economy, and also the provision of liquidity. Trading in the secondary market. Trading in the secondary market is the exchange organized or over-the-counter trading. Now, the Colombo Stock Exchange facilitates secondary market trading of the company shares. It's an exchange organized exchange. And the treasury bills, treasury bonds, and any other instrument that is traded in the money market, always it is over the counter. There is no organized exchange there. If there was organized exchange for treasury bills and treasury bonds, it would have been much more advantageous for much more advantageous for marketing of the particular product or the security, as well as price discovery and liquidity provision. Dealer markets through a system of competing dealers. Dealer markets through now treasury bill, treasury bonds are organized through a primary dealer market to distribute through a set of competing dealers. Now, as we indicated, stock exchange deals with the equity markets and the money market deals with the debt markets. According to maturity of instruments in the money market, cash market is very short-term deposits and advances, including interbank market. And the money market, short-term securities with maturities less than 12 months. Fixed interest market, long-term debt securities with original term to maturity exceeds 1 year. Like example, like treasury bonds. Cash market is also part of money market. I mean, the call money market is part of a money market as well. In the Australian money market, is an over-the-counter market conducted by professional dealers. In Sri Lanka, call money market is also over-the-counter market conducted by professional money brokers and professional dealers in the banks. No specific forum where trading is taking place. Trading is taking place through electronic systems, mainly over the telephone. It is quite similar in Sri Lanka as well, where either Reuters, Bloomberg, or through telephone systems, through money brokers, where when the trading takes place through the telephone, the voice recording has to happen to keep a track of the transaction negotiated. And the electronic systems, Reuters or Bloomberg, should be retrievable to overcome any misunderstandings with the negotiation of the transaction. Money market deals in large sums. Money market serves wholesale borrowers and lenders. Money market serves wholesale borrowers and lenders, whereas there should be other entities ready to market them in the retail markets. Money market participants. In Australia, the Reserve Bank of Australia, the central bank, and in Sri Lanka, Central Bank of Sri Lanka is one of the main participants, uses the market to raise short-term finance for the government and to implement monetary policy. Then depository institutions, banks and building society use the market to manage their liquidity. Fund managers, superannuation, life insurance, and trust funds invest in money market. Companies invest excess built-up liquidity and or raise short-term funds through the money market. But in Sri Lanka, the fund managers and the companies' participation in the money market is very poor, isn't it? Or we could also say they are not arranged for. They are eligible, their sizes, mostly like EPF, ETF, insurance, other trust funds. They could be participants in the money market. Similarly, large corporates also could be participants in the money market. We are talking of the call money market and also other securitized papers that would be available to trade in the money market. So when you increase the number of participants, only development happens. Many other business activities are created. Economic activities are enhanced. Liquidity is enhanced. And the price discovery is more fine-tuned. So there should be some agitation by the participants with the central bank and the monetary authorities to incorporate more and more participants in the money market. Pricing money market securities. Debt instruments, money market instruments are known as discount securities, issued at a price below face value. At maturity, face value is paid. Therefore, face value includes interest. A good example is the treasury bill. Treasury bill face value 100 rupees or multiples of 100 rupees. And that instrument, treasury bill is issued at a discount price. And the difference between the face value and the discount price, the difference is the interest component. And they are at maturity, the face value is paid to the investor as well. Learning objective interest computation. Simple interest is a method of calculating interest that does not capitalize interest and is used in the money market to calculate security prices and investment yields. We will be using one or two examples in the next few slides. I want you to, using the slides, using the formulas given, please practice some examples. I'm sure you're maybe definitely day to day, you're maybe calculating, doing these calculations. But unfortunately, present day, most of these formulas and calculations are done through computer systems. Therefore, the participants, particularly the money brokers, may not be acquainted with the formula, may not be acquainted with the calculations. So I urge you all to get keep a calculator, scientific calculator would be fine, or even a simple calculator would be okay. Use the calculator and then try to compute the price using a formula. And in this particular case, the simple interest. The compound interest is another method of calculating interest that capitalizes interest periodically. Example, treasury bonds. The coupon interest is computed and is used as the interest is compounded periodically to arrive at the price of the bond. Compounding effect increases with the frequency and increases the value of some exponentially. Compound interest is used in the bond market to calculate bond prices and bond investment yields. An annuity is a series of periodic payments for which present value and future value factors can be calculated on a compound interest basis, given the interest rate that can be used to calculate the bond prices, yields, and the payments under a reducible loan. Annuity is like the coupon interest paid every 6 months. There's a formula to calculate that as well. Ironically, the annuities are not very much practiced in Sri Lanka. That is because we do not have much of financial advisors in our country. In the developed financial markets, there are trained and then qualified financial advisors to advise the general public who wants to manage their funds. And annuities are a common financial instrument that are issued by the so-called finance companies or pools of funds to the respective. Now, annuities are good instrument for the pensioners, isn't it? For pension plans. When a capital one-time payment or a series of payment during their work life is contributed, the pension company could structure an annuity for the particular investor employee to receive monthly a certain sum of money from the date of their retirement, at the age of 55 or 60 or 65. An annuity can be arranged for the pensioners for their living standard. This is one of the very unfortunate situations in Sri Lanka. Other than the government employees and the employees of few large banks, those employees are not pensionable. They are not entitled to a pension. So the government has to provide free medicine and hospital services, free food coupons, particularly during the COVID pandemic. They had to pocket out 5,000 rupees each for the pensioners who do not have means of living. So if we can organize the financial service industry in such a manner through financial advisors, and financial advisors should be qualified through an examination to practice, to advise financial matters to the general public. And they could be employed by these finance companies who would sell the pension policies, pension plans, like annuities. So these are the things that we can organize in our financial markets. And they can be big, really big. In the developed financial markets, such companies are such companies are bigger than banks as well. So to calculate the simple interest, shall we say 100 million of call money lent by bank A to B, how do 100 million of call money lent by bank A to B at 5%? This formula is very handy. The interest component is principal 100 million, interest rate 5%, divided by 100 because of the percentage, and number of days, if it is 1 day, 1 divided by 365. So 100 million divided by 5%. If you have a calculator, please use a calculator and then try and get an answer. It will be very handy. You must always try to use a calculator and then see the answer, even if that answer is provided by a computer. If you are laden with much more work, that's all right, but that's one way of checking the accuracy of the computation you received out of a computer. You cannot trust computers always. There can be bugs, there can be viruses, and the answers sometimes can vary. There was one incident at the BOC somewhere in 1980s or 1990s. Exchange rate of Italian lira used to compute through an Excel spreadsheet, and that formula got changed accidentally, and therefore the formula didn't work. The last thrown exchange rate for lira was carrying on for about 6 months. We noticed only when our NRC department, who used to accept deposit for customers' NRC accounts, noticed that there were a couple of guys who imported lira in bulk form from Italy and they deposited that to their NRC accounts to gain advantage of the market rate and the computer printed rate. So such mishaps could occur. So therefore, when interest component or some formula is used to calculate a rate or obtain a price or a value of an instrument, to have a check on the calculation, at least roughly, to notify any absurdity. So future value formula, the principal plus, within brackets, the same formula which appeared in the above, meaning future value is the 100 million plus the interest component at 5%. Now we said 5% overnight, one day. So the next day value is principal 100 million plus the formula shown here is copied here again. So the principal plus interest is the future value. The future value principal is further simplified arithmetically. P into, then we say 1 here and plus, and the formula is replicated. So these arithmetical combinations you must be familiar with. Financial economics is another profession, but still sensible. So if one person is sensible, you could compute the formula. Simple interest, then you arrive at the price, future value or face value divided by 1 plus, then interest rate into the years. Future value is taken to the front here, and the price is, and within brackets 1 plus interest rate plus number of years. And to compute the interest rate, again, arithmetically, you take the rate of interest to the front, and the other formula components can be worked out like this. I'm showing these formula components for you to, you can have the record for future reference as well. But when it comes to real business, most of these formulas are embedded in your software, computer software, and then you could be comfortably obtaining the result. But however, my suggestion is that please go through these formulas and familiarize yourself so that nobody can fool you. Pricing money market securities. Price equals future value divided by 1 plus interest rate into years. We learned in the previous slide. Further amplified. An example. I would like you to pull out your calculator and then work this out, please. Although I've given you the answer, I want to check it out. Money market trading is on the basis of yields. Example, price of a 180-day maturity treasury bill with future value or face value 100,000 at the yield of 8.75% will be, when you are using calculator, the easiest thing is to first take the rate of interest. Why did you put 0.0875 here? Because it's a percentage. 8.75%. That's percent is 100. So 8.75 divided by 100 is 0.0875. So you take 0.0875 to the calculator. And multiply by 180 days. Divide by 365. You get an answer 0.0431, 0.0432. .04315. Yes. And then you press the plus button. 1 equals, you get 1.04344315. And you put that to memory. And then take 100,000 to the screen. And divide by, recall the memory, 1.04315, and you get the answer. Also, practice this method of calculating to a calculator. You will calculate it within 5 seconds. And some guys I know, I have worked with some guys who would do this calculation faster than a computer using a manual calculator. So, investment value will be 95,863.49 and face value will be 100,000 in 180 days time. So 100,000 minus 95,863.49 equals 4,136.51. That is the interest component for the 180 days at the rate of 8.75%. You are familiar with? Please work it out again. Money market has number of sub-markets trading in particular securities. Treasury notes, commercial paper, certificate deposits and negotiable certificate deposits. Those days we had some commercial paper traded in the money market, but now I don't think it is traded at all. And the certificate of deposits, I indicated, please note the current regulation. Certificate deposits are not illegal, but under the Financial Transfer Reporting Act, FTRA, section 2.3, it indicates that every holder, because CDs are negotiable instruments, by endorsement and delivery or by mere transfer of possession, new owner there can be new owner for the CD. So therefore, under the Financial Transfer Reporting Act, under money laundering and terrorist finance regulations, CDs, there should be a record of CDs by the bank who issues the CD, and that particular record should contain each and every holder's details, name and address and all that. So if the CD has passed on to an third or fourth party without the record at the issuing bank, that's illegal. So, but still CDs are being issued by certain banks and finance companies, but they make it a point to say that not negotiable with the crossing on the face of it. So therefore it becomes just a fixed deposit certificate, cannot be given to a third party. Then the commercial bills, like what I said, is in Australian market, bank accepted bills, commercial bills, intercompany and interbank lending, also part and parcel of money market. So These are the securities that can come into the money market. Role of central bank in money market: use money market to manage monetary policy. I explain how they do manage the monetary policy, because to create the interest rate curve from the beginning of the interest rate curve and the yield curve for each product, and the central bank infusing liquidity into the market. They have open market operation window. They will buy the treasury bills and then pump in more liquidity to the banks and the system. And when there's excess liquidity in the system, they compel the banks, primary dealers, to sell, to buy the treasury bills and bonds from the central bank and mop up the excess liquidity in the system. So that's monetary policy. The use of money market to manage liquidity, the same process. Central bank and the Reserve Bank of Australia conduct sale of treasury notes. Central Bank and Reserve Bank of Australia cash rate, official rates are, the policy rates of central bank are standing deposit facility rate current 4.5%, standard lending facility rate 5.5%. And interbank overnight rate is actually the live wire of benchmark of the money market overnight rate. I would guess it is around 4.5 to 5% these days. All right. So that is the end of money market presentation slides. And we are exactly timing the day's closure. I would urge you to do a few calculations like this using a manual calculator, so that you are accustomed with the formula and then how to use it, and try and use some treasury bond formulas as well. I did not give you the treasury bond formula here, but it is available everywhere, the internet particularly. Treasury bond calculation particularly will be extensively covered by Mangala Karunaratne on the second semester formula. That is the reason why I did not bother you all here in this slide presentation. Right. Okay, so we'll come to a close for today, and then tomorrow we'll meet again at 4:30. Any question?
No, sir.
I'll be the happiest man to hear that, because all what I said has been digested. Is that the conclusion? No.
Pretty much.
Thank you, Niluk. Thank you. Anybody else who has any question? Again, to remind, tomorrow I have one more small some presentation. I really wanted to cover a lot more aspects, but the timing has to be also complied. I'll use that presentation and then cover only the required parts. Then by tomorrow we'll be concluding the first semester. So ideally, you should have had the semester examination on the 2nd of May, but unfortunate incidents. The Institute of Bankers building had been made out of bounds for quarantine reasons. So therefore, we'll have the exam in about 2 weeks' time. So please don't forget to prepare yourselves. I know that your assignments are pretty good, so that you'll would have scored some marks here there, but your marks through the exam is also materially important for the final grade. So therefore, please inculcate the habit of learning every day. I want each and every one of you to read through some article every day relevant to this course. And after the finishing this course as well, please take forward that habit so that your knowledge base is added every day. And if you are the lucky one and if you have the desire, you can apply for various other examinations, your degrees, your masters, your PhDs, and then completing your academic qualifications and reach sky high. All right. Thank you very much and good night.